Well, happy Monday again, everybody. This is Bryan Devore with the Devore Realty Group, Berkshire Hathaway Home Services, California Properties, here with your Monday market moment. Today, we're going to talk about how prices are soaring, shocking, employment and housing, and how the relationship is between the two of them, and where are Gen Xers moving? That's one of the articles that we'll talk about in just a little bit. But first, as always, the totals for the week. Right now, there are 2,896 homes for sale in all of San Diego County. That's up 26 from the previous week. So we're starting to see week after week increased inventory. 1,839 of which are detached, 931 are attached. We have 4,399 homes in escrow. That's up 60 from the previous week. So more homes right now are in escrow than coming on the market. 2,847 are detached, 1,426 are attached. Months of inventory, no change from the last week, 60.66 months of inventory in total. For detached homes, it's 0.65, and for attached homes, 0.65 as well. So in the last week, we saw 1,193 new listings come on the market. That's 34 higher than the previous week, and 812 of which are detached, 354 are attached. But new pendings, 812, that's 85 up from previous week. So new pendings climbing faster again than new actives. 538 are detached, 264 are attached. Pendings listed within the last week, 69. So up a little bit from the previous week. 8% of the homes that were listed in the last week are already in escrow, of which 51 are detached. And that was a big jump actually from the previous week. 19 attached, which is a little bit of a drop from the previous week. Now we're talking about the totals, and this is where the numbers get kind of nuts. 651 closed sales in the last week. That's up 5 from the previous week. 465 are detached. 183 are attached. The median list price is up $25,000 from the previous week to $750,000. That's a huge jump. Even bigger, median sales price is up $30,000, way up to $790,000, almost $800,000 for the median price home in San Diego County. Anyone who's watching this who was watching real estate in the last 10 years or 20 years in San Diego County is probably still amazed at what's going on here. So the charts for actives, pendings, and solds from the last week, we can see the trend line of actives going up, up, up. So week after week, we are seeing more inventory coming on the market. But except for 2 weeks ago, every week we're also seeing more homes going into escrow, and we are seeing more closed sales as well. And then the prices. We're still across the board over the last 2 months. Every single week we've seen a higher sold price than list price for the median. And we're starting to see the gap widen week after week. The gap is widening between list price and sold price. And the median sales prices just keeps climbing and climbing. So we talked about employment and how that affects the housing situation. Here's a chart that I found that talks about the major industries and their employment for month over month from February to March, and also year over change from last March to this March. And I think the things that stand out to me are, except for financial activities, every category went up in March versus February. However, every category is down from last year, March to March. But of course, we know what happened last March. Leisure and hospitality, of course, went down when the pandemic started. So what this is telling me is we still have a ways to go, but we are climbing back out of the hole of these substantial drops in all these categories, and we are adding jobs back. So what does that usually mean? Well, in conjunction with this chart, which talks about housing supply in the entire US, and is very similar in California and almost more exaggerated in San Diego, you can see the existing home inventory, and then we see the new home inventory for sale. It's the green, and then the inventory turnover. Bottom line is inventory is crashing. It's been going down ever since January of 06, 07. We had an increase in 10 and 11. We saw as the foreclosures were coming on the market, but just a dramatic drop in inventory across the US. So jobs being added and inventory going down. Then here's the housing market potential. I like this. House buying power and potential home sales. House buying power is a function of low interest rates and increasing employment, and not only more jobs, but higher paying jobs. What we're seeing is house buying power has been climbing, and potential home sales, they're starting to climb, but still a huge gap between what people can buy and what's actually out there. So the bottom line is we have a lot of people out there now who are getting employed, who can buy homes. There's just nothing for them to buy. And that's why we're seeing the supply and demand imbalance. Articles for the week. Again, I found a bunch that I thought were great. So I picked out 6. More millennial homeowners experiencing buyer's remorse. I thought this was a very interesting article that talks about why millennials aren't liking the homes they bought. Many buyers are relocating to low tax states, and it talks about some of the states that they are relocating to. Remote work is transforming resort markets, which is very true. People are working in places they want to live that are beautiful rather than places they have to live because it's close to work. Generation X is looking to move to these metros. So it talks about the different areas of the country that Gen X is looking to move to. Sellers are poised to take advantage of a hot market. That, of course, we know it's a hot market. This is a little more information about that dynamic. And then finally, home prices stoke housing bubble fears. Are they founded? So for any of you out there who have questions about are we in a bubble or not, maybe this will help solve that for you. I really don't think we are. The fundamentals are still solid in there, and this will talk about that as well. That's it for this week. We appreciate you watching the Monday Market Moment. If you have any feedback, I'd love to hear it. If there's anything you'd like to see different or in addition to the Monday Market Moment, please let me know. Anything you want to keep seeing me do, I'd love to add that as well. So we've been doing it now for a year and a few months, and we'd love to keep it going. Glad to see people are watching it, enjoying it, and finding it useful. So if you have any questions, give me a call, send me an email, send me a text, whatever. Hope you have a wonderful, safe, and healthy week. I look forward to seeing you next week in the next Monday Market Moment. Have a great day.